Hello everyone, S-Tier Trader here. I'm about to share with you the absolute best trade that I have taken in my early trading career, and it's most definitely the best day trade that you have ever seen. I'm going to start by playing the trade, and then I'll dissect it in great detail afterwards. As always, I'm completely transparent with each and every one of my trades, and you can easily reference my personal clock in the bottom right hand corner. Note that there are two separate trades that I have entered. Trade A is a market order long from 109.70 targeting 109.92. There are two things that will happen if this target is hit. First, 100% of my trade A position will be closed. Second, trade B, which is a sell limit order, would immediately trigger at this level. Note my take profit and stop levels for both of my trades. I think you get the general idea behind this price engagement. Let's see what happens. Let's summarize what we just saw. I nailed both a long and a short in the same market in the same day while I was asleep. I went long for a gain of 22 pips. I then entered on a limit short, which netted me 42 pips on that trade. This gave me 64 pips for the day. I knew where the market was going to reverse, and I even knew where the market was going to reverse to, all before I even entered trade A. Now, it does seem like I'm bragging, and to be honest, I probably am. I'm just really proud of doing something that I'm sure very few traders have ever done in their trading careers. However, there is one major takeaway that I want you to have from this trade. Day trading is not noise. Don't let anyone tell you that you can't day trade. The market is controlled right to the pip. If this were supply and demand, there's no way that I would be smart enough to predict where the bulls were going to enter the market, when and where they would be overthrown by the bears, and then how far the bears would actually take the market lower. I don't understand that, and you don't need to understand that. Instead, what I do understand is where the liquidity is in the market and how the algorithm will reach for it. Let's dissect this trade. If you want to follow along, which I strongly recommend that you do, go to tradingview.com, search the Euro US dollar, and use the forex.com data feed. This trade took place on March 15th, 2022. The price action that you will see on your chart is the exact same as the price action on my chart. My directional bias for foreign currency that week was bearish. I actually got the weekly direction wrong this week. However, I was still able to net 64 pips. This is just an excellent example on why we don't need to nail the high or low of the week to be profitable. All we need is a weekly draw on liquidity and participate in the meat of the move. With my bearish bias, I was looking for a way to get short in the market. At the time I was looking at the fiber, which was the London kill zone, I was pinpointing the levels above current price action where price would be likely to hit and then reverse at. It was at this moment that I noticed that price was trading just above a fair value gap. The thought of trade A hit me right here. I knew my bias was bearish, and I knew where the market would be likely to reverse at. What if I went long on the Judas swing that would likely occur during the London kill zone? Recall that the Judas swing is the move that baits retail into trading the wrong direction for the day. So trade A was based on the expected Judas swing higher, while trade B would be my standard day trade. Now, because I'm in the middle of tax season as an accountant, I am just unable to stay awake for the entirety of London. And London is when I expected the Judas swing to occur. My primary focus was to enter trade B. Since I wouldn't be awake when the Judas swing occurred, I entered on a market order for trade A and a sell limit order for trade B. Once I set up both positions, it was off to bed I went. My main concern was the stop loss placement on trade B. Recall in my last trade review that my entries in London require larger stops than those in New York. This is because in London, the Judas swings can sometimes be much more volatile than expected. The last thing I wanted to do was hit trade A only for the profits to evaporate and then turn into a loss because trade B got stopped out. Another layer of difficulty came from the 110 big figure resting above my take profit. When price reaches the big figure, we can expect large stop runs to occur. After taking all of my analysis into consideration, I settled on my stop loss placement to be 110.22. This gave me a 2 pip cushion if price decided to do a 20 pip sweep above the big figure, which is what we expect. This analysis is the absolute superhero of this trade, as price ran to 110.19 and 9 pipettes. This is just 2 pips below my stop loss. Price certainly gave my stop loss a spook before reversing lower. Another portion to analyze are my take profit locations. Trade A was obvious. I wanted 100% of my position to close where I wanted to take my short at. If you've been studying ICT, trade B's take profit locations should be fairly obvious as well. Let's see if you can identify why I chose these take profit locations for trade B. Pause the video. Recall from ICT's 2022 YouTube mentorship that the algorithm only ever draws to two locations: liquidity and imbalances. Take profit number 1 is an imbalance. Take profits 2 and 3 are located where there were just a lot of sell stops resting. While I initially had 3 take profit locations, notice how I remove my furthest take profit and then recalibrate my take profit percentages after I wake up. This is because of the time of day factor. It is nearly the end of the New York session, and price hadn't triggered the expansion lower that I was looking for. There was also only one medium impact news event remaining, which meant it wasn't likely that price would run the 100 pips needed to take out my third take profit. Notice here that price looks like it's offering just a fantastic buy scenario. Not only is price trading at a bullish order block and there's optimal trade entry here, but for you old school ICT nerds out there, notice that there is a bullish breaker here as well. What was the higher timeframe directional bias, however? It's bearish. I'm not expecting bullish order blocks or OTE or what have you to hold here. I'm expecting them to break in favor of lower prices. And break they did. Price slices through my 2 take profit locations like a hot knife cutting through butter. My trade is now complete. In 12 hours, I netted 64 pips, nearly tripling my weekly goal in just one trading day. This trade brings me to 218 pips on the month. Every single one of those pips can be seen on my YouTube channel. If you've never seen a trade like this, or have ever seen someone share 200 plus pips in a month before, please go long on the like and subscribe buttons. One more thought before we wind this trade up. While this trade was impressive and it pounded out really well, I definitely would approach trade B differently in the future. I opened myself up to too much risk with my stop loss where it was. If this were a live trade, I have no doubt my broker would have opened up the spread and wiped me out before the algorithm took price lower. In the future, I will wait until at least the low risk sell forms before entering the reversal. If I get too cocky, which I probably was in this trade, the market is just waiting to land one right on my kisser. Well, that's all I've got for this video. Thank you so much for participating in the best trade that I've ever done in my early trading career. Make sure you guys are still studying hard. I can't believe we're already 20 episodes in to the YouTube mentorship. I'm hoping that you guys are just loving it as much as I am. Take care, everyone. Good luck and good trading. If you want to see me hit 74 pips in one trading week, click the video on the left. If you want to begin your journey to becoming a professional trader, click the video on the right. Please go along on the like and subscribe buttons. Thanks for watching.